are going to be talking about entering beginning balances today, which is always a fun one. I actually have, so while we're giving people a couple minutes to get logged in here, I actually have this video, so entering beginning balances is our top watched video in our YouTube channel. So if you didn't know, we do have a YouTube channel. It's just Fourlane. And on that YouTube channel, we have videos. We have 800 something videos. A lot of them are webinars though. So we have some small snippet videos, and then we have all of our webinars, both the Enterprise series and the QuickBooks Online series, and some other series in there, QuickBooks Desktop versus Online, you know, QuickBooks or Acumatica versus QuickBooks Desktop versus Online. So we've got tons of different videos in there. But this beginning balances one that I did in 2011, I think, is the most watched video that we have by so many levels. So it will be good to kind of do a refresh, show it in QuickBooks Online instead. And then that way people can get a little refresher there. Okay, so we're gonna push on forward here so you can see a little bit about Fourlane, what makes us unique. Today we're gonna be talking about kind of the strategic partner and change management. We were even discussing this morning about how you know, we have customers who come to us with failed implementation a lot, meaning in any of the softwares that they're in. And like right now we have one that is in NetSuite and needs some help with importing detailed history, and they're not getting help anywhere else. So we're going to be figuring it out with them. Not that we don't know how to import, but figuring out what they need, right, imported. And it is great to see that, because then we, you know, regardless of the system, we know the debits and credits that should be happening, and that helps us to push through for those changes that need to be made. So we're going to talk about today. So my hope is, it's going to be a multi-part series of beginning balances. My hope is to get through the open accounts receivable and open accounts payable, and where this could apply for not just people who are new to QuickBooks, right? So this is not just so people can DIY their conversion into QuickBooks. This could also apply for people who we have in other businesses set up. They have, as an example, 4 different QuickBooks files, and they now need it to be one, right? Now, this is something as a service that Fourlane does, consolidations. We can move the entire databases into one, but let's say we didn't want to. We have clients who sell off a division of their company, and they need to start a new file with just open balances for that new division. We have clients that purchase companies, right? And they need to push in open balances, not, you know, detailed history. They need to get open balances into the system without affecting P&L, because the P&L was affected in the prior company. So there's a lot of different reasons why we would be putting beginning balances in the system that are not just, I am converting from, you know, 0 to QuickBooks type thing. Okay. And these concepts of how we enter them in also can be applied in other products. It's not just about QuickBooks Online. So the concepts of beginning balances can be utilized in any software, really. So just a little tip there. Don't have to be scared of the software. If you know the process, the software really doesn't matter that much. All right, so we are going to start in the QuickBooks Online test drive. So I always like to remind you guys that you can go into the QuickBooks test drive files. I always, if I'm doing any kind of test drive, I like to use the online advanced file. So I can click into that. Of course, I say I'm not a robot. I like to show you guys this because if you want to click around and follow around, let me, just a second, I was logged into my own file here. So let's see, how do let me try one more time. I'm not a robot, okay. Oh, of course, it's not gonna, okay, well, I'm gonna do it. Let's try and do it not in this, maybe it will let me do it not inside of QuickBooks Online. Always, you know, it's like I can't test before I get on these. Okay, well, I'm just going to do it not in a sample file, but you can use the sample file to follow along. How about that? All right, so let me get a passcode to get into one of our sample files here. Always fun, right, on a webinar. Thanks for being with me for the journey. Okay, so you can follow along in one of the sample files so that you're not messing with your live QuickBooks file. And I'm going to use one of our demo files that we have set up. So we're going to start out with accounts receivable because I like to go generally when we're importing or setting up new files, right? The first things that you import always is chart of accounts. Then you import, your different lists, your vendor list, your terms list, your vendor type list. Then you go to your items list, and you have to have your vendors set up before you set up your items because you have preferred vendors, so they have to be there on the list before you can have your items set up. So getting all the lists into the system is very important, right? But now we're talking about balances, and how do we get the balances into the system? And accounts receivable is usually one of the first ones that we push through. So if you can think about what happens in an accounts receivable transaction, and I'm going to bring up just an Excel spreadsheet so that you guys can kind of see through what happens, okay? So when we look at the debits and credits of a transaction, on accounts receivable, on an invoice, an open accounts receivable transaction, that would be an invoice or a credit memo. We have accounts receivable on the invoice, right, is debited. We have the debit. Let's pretend we have a $500 outstanding bill. And then on a normal accounts receivable, then the credit goes to income, right? And I'm talking not inventory related. So this is the normal happening when we put an invoice in the system. Now, when we are importing open balances, generally we put in all the open transactions and then we put in the open trial balance, right? And a trial balance includes this $500. So I don't want to double post it. So we have to post this somewhere else, right? And so the accounts receivable side, when you put in an invoice, it's going to hit accounts receivable. That's what the program does. So the credit side is where we are trying to figure out what do we do with that side, okay? We don't want it to hit the P&L because the trial balance or the profit and loss that we're putting in the system is going to have already captured that. So what we want to do instead is we need it to be on the balance sheet. So that's key one. So we take it off the P&L and we put it on the balance sheet. Now, in a lot of the trading that QuickBooks provides, what they say put in open accounts receivable and post it against opening balance equity, which if we look inside of our QuickBooks file and we go to our chart of accounts, opening balance equity is one of those accounts that is set up inside of QuickBooks Online naturally. Okay, so if I come down to the equity section, we have this opening balance equity bucket. Okay, so a lot of times people say put it all opening balances that we're putting in the system offset against opening balance equity, which is true. You can do that. However, here at Fourlane, we like to do it a little differently because throwing everything into one account makes it harder for us to see where there's a variance, right? So if I throw open AR, open AP, open inventory, unclear checks, everything flowing through one account, then it makes it very difficult to see if I'm off somewhere. So we instead do something a little bit different here at Fourlane. What we do is we set up an account called AR Clearing. And this would be an other current asset. And so the reason that we do that is when we import the opening trial balance or the balance sheet numbers, right? What I'm going to put in all of the open invoices, and let's pretend for this situation there's just one. My invoice is going to hit accounts receivable, and the offset is going to be AR clearing, right? Then when I put in my trial balance or my open balance sheet, the entire balance sheet, I'm going to pick up that AR clearing, right? So I put in, cash, all the cash account numbers are debited, and then I have AR clearing instead of AR. And I'm going to put in the $500 there as a debit, $1,000 in cash, right? Then I get down and go down the thing. But the goal would be that when I put in my open transactions, all my invoices that are outstanding that I need to put in the system, they all hit AR clearing. And hopefully, then when I put in the trial balance, it will offset the total of that open AR that I'm entering the system. So let's take a look at it. I know that seems very confusing, but let's take a look at it in product, okay? Did I go back in product? Okay, so the first thing that we want to do when we are setting up open accounts receivable is we want to create that AR clearing account, right? So I'm going to come up here and create a new account. This account, this AR clearing account, is not going to stay active beyond doing my setup, okay? And in fact, after you get everything to balance, you can merge that account. You can change the account type and merge it into another account to kind of get rid of it. But I want it set up when I'm starting things out. So I say AR clearing. I'm going to save it under other current assets. The tax form selection, because it's required, right, will just be other current assets. Hopefully there is no balance in here, so it should not need to flow onto a tax form. Or not hopefully, at the end of the day, there better not be a balance. It needs to be cleared out before we start everything else. And then I just call it AR clearing. Okay. And AR stands for accounts receivable. I have my AR clearing account. So now I have my AR clearing account set up in there. The second thing that we need is we need to create a new item, right? And this item, same thing, will be used during beginning balance setup. It should not be used at any other time, right? So we're gonna go in and create new items. So I like to do all of these things from, I mean, you can come into here and do it, but I like to do everything from the invoice screen because it's just a little bit easier. Now, we're also looking at how to do this manually, right? Of course, one of the things that we do here at Fourlane is make sure that we can import these because keying anything manually is quite frustrating. But by looking at how to do it manually, then you can understand what is happening with the import. So if we are manually setting up, let's say 3 invoices. We've got 3 invoices that are outstanding from a customer when we are converting across. Now, 3 is a very simple number. We would not be importing 3. If there was 3, we would also recommend manually entering them, right? Because that's pretty silly. So when we bring in open balances, there's a couple things that you want to think about, right? So sometimes, like if you go to Intuit directly, Intuit will bring in a lump sum, depending on who you get. Intuit will bring in a lump sum open accounts receivable number. Okay. When you think about, like, why could that be problematic if I brought in a lump sum accounts receivable number? One is, what do we do? What is accounts receivable there for? It's so that when I go receive a payment, I can apply it to an open invoice. But if they just have a lump sum, I can't receive a payment because it's not tied to a customer, right? So you want to make sure, number one, your open balances are tied to a customer. And the second thing You know, when we create statements to our customers or whatever, we want to make sure that the statements are accurate. We don't want the customer to see just lump sum, giant lump sum. We want them to see, you know, they have $500 that is past due from 30 days ago, and they've got $1,000 that is past due from 90 days ago. So we want it to be accurate as far as timing. We don't want the customers to be affected with our changes, our customers to be affected from our changes. So that means that we have to put in the transaction. So not just customer matters. You don't want to open accounts receivable in one giant lump sum against a customer. You want to put in per transaction your open balance. So it's tied to the customer and it's tied to the appropriate invoice, right, which is tied to a date. That way, receivables, reports, all that stuff, right, that it really matters. So I'm going to come in here and choose customer. I'm not going to set up customers. You guys have seen customer setup before. But I say ABC store, right? Things that matter, terms do matter. If this is a cutover and you want to make sure that you're doing collections at the right time, invoice date definitely matters. Because again, if you're doing collections, I need to know when I need to start calling this customer to collect from them. Now, open balance, usually you're picking a time. So let's say we're doing a cutover from our old system to our new system as of 5/31. Okay. So the 5/31 is when we're going to put in our open balance sheet, right? Our balance sheet balances. But our invoice, we want it to be dated the date of the original invoice. Let's say 5/18 as an example. Okay. Invoice number also matters because when we go in to receive the payment, we want to make sure that the invoice number is correct. All of the rest of these things really shouldn't matter, right? Because usually we set up custom fields in here to run based off of profit and loss reports, and we're talking about setting up a transaction that is balance sheet only. So we come down to product and service, and we're going to add a new product. Now, normally we say between non-inventory parts, right? We know what inventory parts are. That means you're going to have a coin on hand. Bundles, or you have several parts or products that are sold together, right? So we're not going to be doing those two. Between non-inventory parts and service parts, in other versions of QuickBooks, we have something called an other charge item, right? We don't have that in QuickBooks Online. So what we say is if you're not sure which one to use the one that you're not using for the rest of your items list. So if you have a lot of non-inventory parts in your items list and very few services items, then for these like miscellaneous type of things, set them up as service items, right? Because those are things that are not necessarily the bulk of your business. So I'm going to set this up as a service item. Whether it's a service item or a non-inventory part, the net effect is the same, right? The net effect of that is the same. And what you can do with that is the same. So we're going to put in Open AR. That's going to be the name of my item. I don't have to fill anything else out in here. When you say you sell this product to your customers, the answer is yes. Like I do sell this product to customers. What that means is it's saying on a sales transaction, I want it to hit this account. So the account that it's going to hit is AR clearing. Okay. Then don't want to put a rate in there because you don't want to have any standard rates filled in. It is non-taxable. So we can say, they are non-taxable in the system. There is no revenue recognition. Now, sometimes, again, when people, instead of pushing it to an AR clearing account, they push it just to opening balance equity. Instead of setting up just one item for open accounts receivable, and then, as you can imagine, we're going to set up an item for open accounts payable as well. When people tend to just flow everything through opening balance equity, they will set up an item that is just called open or maybe open transaction. And then it will say, when I sell this product, hit AR clearing. And when I purchase this product, meaning it's on a purchase type transaction, then hit the AP clearing. Or both of these will say opening balance equity. Okay. So if you're flowing it through as one, a more simplified fashion, you can. Otherwise, what we recommend, right, which is flowing it through separately so I can really figure out if there is a variance, where that variance lies. Now, telling you guys this, Fourlane converts a lot of companies across, right? NetSuite, we have had it in the most recent months. Lots of DOS clients coming, people coming from DOS wanting to move, DOS-based systems wanting to move to QuickBooks. We have people all over the place. And in some of these older systems, Epicor, some of these older systems, accounts receivable may not, right? What your AR aging summary report may not tie out to what your balance sheet shows. And so there will be a variance in this account that we have to deal with after the fact. All right, so this is the item setup. I'm gonna go ahead and set up, save and close. The item's in here. I put in the opening balance for ABC store, and I'm gonna put it for $1,000, not taxable, and I save. If I look behind the scenes, on more here at the transaction journal for this, you can see what was set up and shown on my Excel spreadsheet, which is that we are hitting accounts receivable as a debit, and we are crediting AR clearing. Okay. All right, so let's go ahead and create another new invoice. And we are going to create this invoice for Costco, and all of the things, right? Invoice date should be the appropriate date. Maybe this one is due upon receipt, so they're going to be past due when I'm importing them in or setting them up in here. I have the AR clearing or open AR item, and then this one, they owe me $25,000. Okay, and say save. All right, so I have two in the system. So now let's go look at the balance sheet and see what has happened. When we come in to our reports and we look at our balance sheet, we have other dollars in the accounts receivable, right? But then we have in this AR clearing negative $26,000. So let's do on the opposite side accounts payable really quickly. So you guys can see that, because I was hoping to get through both accounts receivable and accounts payable today. So in accounts payable, same thing. What we recommend is we set this up as an other current liability. It is a other current liability on the tax form because it should come out to zero. We have our AP clearing, and then we save it. So we set up the account. Now I come here and enter, right, what type of transactions are affecting accounts payable, bills, and vendor credits. So I come in here and I enter the bill. I choose the vendor. I'm just going to save it real quick. I do not use category, right? We like to use items on import or setting up, because I could come in here and just post it straight to open accounts or, AP clearing. But we like to use items. I would set up a new item, right? Again, I forget if I did service or not. Call it AP clearing. Say I sell this product to my customers. No, we don't sell it, but I do purchase it from vendors, and it would be hitting that AP clearing account. Okay. So AP clearing, I put in here, I have an open bill for $5,000. And then I can save it. Now up top here, again, this is where terms matter. I want to put in the net 30 terms, the date of the bill that was created, the bill number matters, right? So that when my accounts payable person comes in to pay something, they know which one to pay. All of these above information matters. And then when I say save, and I go look at my transaction journal for this. It's a very similar feel except flipped, right, where I have my accounts payable being credited, since accounts payable is a natural credit balance, and my AP clearing is being credited. Okay. So that puts in the transaction by the vendor, by the bill, by the date with the term, so I know what date that bill is due. And when I move forward in my new file, or when I move forward in, now that I have my files merged or whatever the situation is, I can function. Right? That's the goal. There's no stopping place. My vendors are not affected by what is happening with merging companies together. Okay. All right, so now how does it get cleared out of the open AR and open AP? Now, I'm not going to enter the full trial balance right now, right? Because that is something that we're going to take in one of the other videos that we do about open balances. But how it gets cleared out is when we are moving balances across, what we do is we recreate the balance sheet, right? We generally, again, are not recreating profit and loss necessarily. Sometimes we are recreating profit and loss by month, right? If it's May, we might recreate profit and loss for January, February, March, April, May. And we might put in balance sheet as of January, February, March, April, May if they wanted to have comparative balance sheets. But I'm going to pretend that we're just cutting over May 31st. So we would be coming in and entering the beginning balance sheet balances in here. And part of beginning balance sheet balances would be open accounts receivable, right? Now, when I post a journal entry in QuickBooks to accounts receivable, I have to choose a customer. Okay, but we already put in the transaction to the customer. So when I put in that open balance, I have AR clearing is what I'm posting against. And it would be a $26,000 debit, hopefully, right? Instead of posting my balance sheet to accounts receivable. On the other side, I would be putting in AP clearing. Instead of posting, when I look at my balance sheet and I recreate it in the system here, instead of posting it to the actual accounts payable account, which would require me to put in a vendor, I am posting it to AP clearing, which does not require me to put in a name. Okay. All right. So that is how to put in open accounts receivable and open accounts payable balances into QuickBooks Online. Let me see if you guys have any questions for me. Let me see. So Lauren was saying that she agrees. They also do AR clearing, AP clearing, inventory clearing. So they break it out like that as well. Okay, so then the thought process of this method is when you're doing conversion and the expense income has already been recorded in a prior period. So yeah, Christina, that is truth. So this is the process when we do an accrual-based conversion, right? When somebody functions on an accrual basis. If somebody functions on a cash basis, that is a whole different story. The majority of our clients do not function on a cash basis or run their books on a cash basis, right? They might report tax things on a cash basis, but they don't run their books, right? They don't make decisions in their company on a cash basis. They might report tax files on a cash basis, which is a little bit different. But yeah, this is during a conversion, during a new file setup, for all of those people out there whose QuickBooks Desktop to QuickBooks Online in-product conversions are failing, right? This is something that we can get people to be using QuickBooks Online, right, with these opening balances. So they can get there, they can function, we can deal with history, secondary, if we need to. Okay, I'll hang out for a couple minutes if anybody else has questions. Otherwise, next week, what we're going to be going through is we're going to be talking about inventory, opening inventory balances, how to get those in there manually. Again, we're going to be talking about, hopefully we'll get to unclear checks. I'm not sure if we'll get there or not, but hopefully we'll get to unclear checks. If not, then unclear checks, non-posted trial balances will definitely be covered in the following week. All right, I will see you guys next week. Thank you.